Hello everyone, welcome to EduTap. I'm Surbi and this is Perspective 360 Degree, your one-stop solution for current affairs, descriptive writing and answer writing evaluation. Before proceeding any further, kindly let me know in the chat section if the audio is clear, if the background is clear to you and there are no issues on the technical front. And then let's begin with today's discussion on a very important topic. It is from one of the most important reports of all years and it's called the Global Economic Prospects Report. It is released by the World Bank Group and it has recently been released like 2-3 days ago, and hence especially from our economics perspective for exams like RBI Grade B, this report is going to be very important because in the previous years also we have seen a lot of questions coming from reports part of your current affairs. All right, good evening Saurabh, thank you. Rohit, hello Rohit. Good evening Sejal, thank you Rohit. All right, aspirant and Niharika. So welcome back all of you. And so, uh, Global Economic Prospects Report. Do we have to prepare for a global economic slowdown? Is a global economic slowdown upcoming? See, first of all, just to give you a brief, background, there have been two reports which have been released at the same time. This one is the Global Economic Prospects Report. It has been released by World Bank. The other one has been released by UN Department of Economic and Social Affairs, that is UNDESA. It's called the World Economic Situation and Prospects Report, WESP report. Now, sadly, both of the reports predict that the global economy is going to see a slowdown. And, the first one that we are discussing today has also said that the slowdown is going to be as if the global economy is going through a recession. Now, what are the problems? Why do we have a global economic slowdown going on? The previous 2 years were very slow in terms of economic growth. It was predicted that, recession would be anytime around, and many countries actually saw recession. But thankfully, recession was not there. A global recession was not there. But what do you think are the problems that, curtail the growth of global economy at this point of time? Kindly let me know in the chat section. This is 53rd discussion of Perspective 360 Degree, and I expect you to know at least the basic factors behind the slowdown in economic growth by now. So kindly let me know in the chat section, what do you think that why is the global economy not growing? So yes, Saurabh, Rohit, Sejal, aspirant, Niharika, prototype, good evening, prototype, Anurag, good evening. So what do you think? What are the problems with growth in global economy? Uh, okay, see, any doubts with regards to the answers and their reviews? For those doubts, you can reach out to us at this number or this email ID, or let me know towards the end of this discussion. Yes, starting with the COVID-19 pandemic, the global economy actually received a shock after the COVID-19 pandemic, even during that time. When we thought that we have recovered from the pandemic, then there was this war between Russia and Ukraine. For some time, trade lines with Red Sea were also, they were packed, they could not be accessed. But the most important role that was played by Russia-Ukraine war, which has changed how global economy functions, whom you carry out trade with. For example, India is also carrying out trade with Russia separately and exchanging in terms of rupees. But yes, global economy has been impacted, global trade lines have been impacted. And finally, in the previous year, we had the Gaza conflict or the Israel-Palestine war. So now you must be thinking, ma'am, how does a war impact other part of the country, other part of the world? How is it impacted? I'll make everything clear to you. First of all, going through some headlines, this is from the Mint. Global economy will rack up a sorry record by the end of 2024. So 2024 has not been said to be very happy on terms of on economic front. Then global economy set for weakest half decade performance in 30 years, that is in 2024. This is the snapshot of the World Bank website. And now, first of all, let's look at this topic from your exam point of view. If I look at the syllabus of RBI Grade B, under the ESI portion, there is a topic of IMF and World Bank, which is separately mentioned. Now, in your syllabus, there are some reports mentioned by IMF, World Bank, and other organizations. This report is not a part of that, but since it is an important report by World Bank and it is related to, economic prospects, hence it is very important for you. Again, for NABARD Grade A, IMF and World Bank are separately mentioned in the syllabus. For SEBI Grade A exam, you have, economy part and finance part is separately mentioned. You never know that even if the topic World Bank is not mentioned, but they might frame a question out of this and present to you because of the importance of this report. So first of all, let's look at the expected question. In the expected question, I will take you through the, observations of this report, what this report has predicted or observed. And if a report predicts some of the problems, then there are high chances that an international organization like the World Bank, it will definitely give some recommendations also. So have there been any recommendations attached to this report? Yes, there have been, and we will be covering those recommendations as part of this report. And I have a request here that even though you cannot remember all the data or information or recommendations in one go, that is fine. Just write your answer, post your answer in the next 48 hours and keep revising this topic, and try to use the data of such reports in your other answers of economy and finance or in any other parts of your syllabus. There is one topic of climate change also in this report that we will be covering. So kindly relate it with sustainable development or climate change answers also. That's how you get better in answer writing. So that's the question for you. Briefly highlight the key takeaways and recommendations of Global Economic Prospects Report of 2024. Very easy to understand. You have to talk about the key takeaways. That means whatever observations and predictions have been made by the report, you have to talk about them. Secondly, talking about recommendations of this report. So obviously this is going to be a long answer, and this is going to be for 600 words for 15 marks. Also, whenever you're talking about such reports or indices, the best foot forward you can put is that, talk something with regards to India. Any observation which has been made with respect to India, kindly mention it. Do not omit it. And even if you don't find it in the notes, kindly Google it, because there will be at least one recommendation or one observation with respect to India. Okay, so I'll come to your responses in a while, but first of all, sharing the answer blueprint with you. This is the answer blueprint that you have to follow to write your answers. This is the best way to write your answers. So we start with the question, and here we have the introduction. That is the first part. Introduction is basically few lines that focus on the topic or theme of the question. It is a basic warm-up, you have a warm-up session with a friend, warm-up conversation with a friend. Just like that, talk about that topic briefly in the introduction. Can you flaunt your knowledge here? Yes, you can do that. Can you give a brief idea of what you are about to write? Definitely do that. Then in the main body, whatever the question is asking us, whatever micro questions are there as part of the bigger question, we will be addressing all of them in the order in which they appear. For example, here you've been asked about key takeaways as point 1 and recommendations as point 2. So can I write recommendations before and can I write key takeaways as body part 2? No, don't do that. Write key takeaways first, then write the recommendations. That's your way to go. And your body part can have multiple subheadings. And then finally we end with a conclusion. In a conclusion, we mostly try to give a solution, or we try to predict a happy future. Our conclusions have to be positive and they have to be very, very clear about what we have written in the answer. So let's begin with the introduction, and here we'll be talking about the general overview of the report. Don't throw a lot of data in the introduction itself, because you will be using that in the body part where you'll write about the key observations or key takeaways of the report. In the body part 2, we will write some observations with respect to developing countries, and here I will be focusing a lot on India, what has been said in this report with regards to India. Then in the body part 3, recommendations will be given that have appeared in the report, and finally we'll end with the summary. Look at this. The body part 3 is your way forward or the recommendations. That means these are the solutions given by World Bank for the global economy or countries. That means there are no more solutions required, because the question itself is asking you for recommendations or solutions. So in the conclusion, you'll not give a way forward, you'll just summarize, or if you know some statement by a very strong personality of World Bank, the chairman of World Bank, then kindly write it down in your answers. Okay, now starting with the introduction. Okay, all right, Sejal, I'll come back to that. So in the introduction, first of all, you have to mention about the report. What does this report say? So first of all, the report says that, first of all, you should know that this is a flagship report. Report is, or a flagship index is something that is connected with the name of that organization. For example, World Bank Group. What does it do? It deals with economy, deals with funds, donations, grants, everything with regards to money. So flagship report is basically the most important report of a particular organization. So yes, this is a flagship report. Global Economic Prospects Report is the flagship publication of World Bank Group. Point number one. Second, here, why are we using this line? Because nowhere in the question has it been told to us that this is a report of World Bank. So, you know, the examiner is asking you an objective question also by not mentioning the name of organization. So here, by just saying that it is a flagship report of World Bank Group, we have told the examiner that we know where is it coming from. Secondly, talk about its like summary in like in brief. It says that yes, there was no recession. And why was there no recession? Because the US economy, which is the strongest economy of the world, that has remained very strong. Since there was no recession in USA, hence there was no recession in the world. When in 2008 there was financial crisis or recession in USA, there was recession in all over the world. So hence this says the global economy is in a better place than it was 1 year ago. So yes, improvement is there, and the risk of a global recession has receded. That means we will not see recession. The risk has gone down largely because of the strength of US economy. Okay. Now there are other things that it has said and which are not good. It says that 2024, you know, this decade of 2021 to 2030. If you remember, 2030 is the goal year to achieve sustainable development goals. It is the final year for that, and a lot of climate action, a lot of poverty eradication, a lot of upliftment of poor, investment in infrastructure, investment in cities is required to attain 17 sustainable development goals. So hence, what was the most crucial decade to attain them? That was 2021 to 2030. But it has been said that 2024 is going to be the almost the mid year of this decade, and we are going to see the slowest growth in 2024, though there is some amount of recovery, but the result is not positive. So, and the risks have been and the problems have been mounting geopolitical tensions, which could create fresh near-term hazards for the world economy. Okay, so fresh near-term hazards means the previous one was the COVID-19 pandemic, from which all of us are still recovering. As the world nears the midpoint of what was intended to be a transformative decade for development, especially for SDGs, as I told you, the global economy is set up to rack up a sorry record by the end of 2024, the slowest half decade of GDP growth in 30 years. That means, you know, 2021 to 2024 has been the slowest have been the slowest decade, have been the slowest years in the past 30 years when we talk about GDP growth of the entire world. Just like you have GDP for the for your country, all countries have their own GDP, and when you compile that, you get GDP of the world. All right. So not a positive picture there, and it spells out, obviously it gives solutions. It spells out the transformation that can be achieved. Yes, transformation is possible if governments act now to accelerate investment and strengthen fiscal policy framework. I will come to this in like later when we discuss the recommendations part. I'll explain this very much properly, that how can we accelerate investments and what do we mean by fiscal policy frameworks, what changes have been recommended by this report. Till this point, if you have any additions to make or any doubts that come up in your mind, kindly let me know in the chat section. And then we are moving to the let's delve deeper section, where we discuss the exact question that has been asked. In this part, we'll be discussing body part 1, that is key observations, body part 2, observations with respect to developing countries, and we'll also be talking about recommendations. So, okay, yes, Anurag, that's right. How can we summarize all of that in 600 words? Saurabh, as you see, these are just one-liners. So these are not big paragraphs, though the content appears to be very verbose, but these are not big points. So you will be just discussing, for example, here I have, these are just one lines for everything. So you will be definitely able to finish your answer in less than 600 words. Uh, okay, Sejal, I'll get this addressed. Don't worry, I'll get this addressed, okay? Um, all right. So moving on to the body part one, that is key observations of the report. So the observations we will be discussing under five heads, and observations for developing countries have been given separately in the report. Why have these observations for developing countries been given separately? Because developing countries are at the receiving end of any global economic shock. If you know there is a recession in USA, the poverty levels in India will see a shock. More and more people will be pushed back into poverty because your trade will be affected, per capita income will be affected, people will be losing jobs in the country, our GDP will be affected. So, whenever there is an organization like the World Bank Group whose goal is to promote economic prosperity and economic equality in the entire world, they will definitely mention poorest of the poor countries or developing countries or both, and they will give recommendations for such countries. How can these countries tackle with all these problems? Because this organization knows that countries like India are struggling with GDP growth, we are struggling with employment, and similar is the case with other developing countries also, especially after the pandemic. So five highlights we'll be discussing here. First of all, global economy. Let's talk about what does it say about global economy. So despite a reduced risk of global recession, is the positive is do we see a positive future? The medium term outlook, it remains challenging right now due to slowing growth, stagnant trade, and financial difficulties. We have not been able to find a solution after the pandemic and those wars and things like that. Then what is the global outlook that has been projected? Is it positive or negative? The global economy, it is resilient. That means a recession or a very big shock will not be seen in the global economy, but it faces a dark outlook with growth expected to slow for the third consecutive year. Now, economic growth has been slowing down since 2020. And, I'll show you some projections. The growth projections which have been made by this report. Every report can give separate GDP projections for every country for the world, and so you have to, first of all, for your objective part, this data has to be recalled by you, and you will see that economic survey gives a separate projection for India, World Bank gives a separate projection for India. Then these data points are important for the objective as well as the descriptive part. Kindly remember at least projections by the important organizations. So World Bank Group says, or this report says, that the growth was 6.2% in 2021, which actually declined to almost half, that is 3% in 2022, and it went down again in 2.6 in 2023. That means and now in 2024, is it going to increase? No, again it is going down to 2.4%. So 2024 and 2.4%, I think these are like similar digits, you can remember them. And for 2025 they have expected that it might increase to 2.7%, but 3 consecutive years, one after the other, slowing down growth has been seen because of various factors which we have discussed in the introduction part, and this is notably below the 3.1% average growth observed in 2010s. What was happening in 2010s? The global economy was recovering from the financial crisis or from recession of 2008. So even that time the average growth was 3.1%, and in 2024, look at this, it's just 2.4% that is expected. Okay, so it's not a positive projection that this report is giving us, but obviously we have solutions. Global trade, it has gone down, so it in like 2024 also it is anticipated that the global trade growth, it is going to be only half of the average in the decade preceding the pandemic. Now, how does global trade growth benefit? Let's say you're an entrepreneur, you launch a factory that produces some luxury goods, and those luxury goods, they're sold in your country obviously, but you want to export them so that you can get a high price for them. But now this report says that global trade growth is slowing down. That means entrepreneurs like you or any other people who are involved in trade, export and import, they're not getting benefit. That means lack of foreign currency in your country. Any global shock will erode the foreign exchange stocks that are there in your country, foreign exchange reserves that are there in your country. That means economy is at a very risky juncture if your global trade is not doing good. So it is only half of the average in the decade preceding the pandemic. Then climate action, and very important here, use this for sustainable development, use this in the social issues part of your answer. Climate action requires urgent attention because island countries, poor countries, developing countries, most of these lie in areas like tropical region, these lie in, or in areas which are highly impacted by climate change. So it says that to achieve global development goals, first of all, to achieve sustainable development goals by 2030, developing countries need investment of about 2.4 trillion per year with comprehensive policy measures. Now, if you have been continuously following Perspective 360-degree, we covered the recent conference of parties. COP28 was covered a few days back. If you do not remember what our climate targets are, what is the Paris conference, what is Paris climate deal, kindly refer to that video after this discussion in the playlist on our YouTube channel, and related with that even World Bank says that there is a gap of 2.4 trillion per year that has to be filled if developing countries have to recover from any climate change impacted activities, or they have to succeed in their climate action goals. Now, there are some observations with respect to developing countries. Obviously, developing countries are going to be impacted more, and here there are some growth projections which have been shown for countries like Bangladesh, developing countries, Bhutan, Nepal, Pakistan, and India. So for India, growth projection has been kept at 6.5%. That 6.5% growth would be there. But look at what growth we were witnessing in 2020 and 2021. It was 9.1. 9.1% was witnessed. World Bank says that India will be witnessing a 6.5% growth. Ministry of Statistics and Planning Implementation says that India will be witnessing not 6.5 but 7.3% growth, and India will remain the fastest growing economies. So is the World Bank saying the same, that will India be the fastest growing economies? Yes, that is that has been said by World Bank also. So it's a good news for India. That's especially because of the investments that are being made, new policies that are being brought by the government. So India is faring at least in a good situation. Now, five recommendations or five observations with respect to developing countries. Poor credit ratings. Few days back, I taught you what credit ratings are, and how they impact a country's reputation. Nobody wants to settle a business in that country. Nobody wants to give loan to that country. So countries in the developing world which have poor credit ratings, they face high borrowing cost, because the lenders, they feel that this money might never come back. So high borrowing cost means, that means money to these countries or loans to these countries are given at a high rate of interest. Amid global interest rates at 4-decade high in inflation adjusted terms. So inflation is high and interest rates are high, and who is suffering? Developing countries, especially who have poor credit ratings. Which are the countries who have poor credit ratings in the developing world? Is it India, Pakistan, Bangladesh, Sri Lanka? Which are these countries which are asking for funds or loans from other countries or organizations, but they're not getting them? Kindly let me know in the chat section. Then per capita investment growth in developing countries is expected at only 3.7%, and this needs to increase, because this low per capita investment that is actually hindering the growth progress of these countries. Then their growth is projected at 3.9% on average if we talk about developing countries, and it is like 1% below the previous decade. So with all subsequent decades, we want growth rate should increase, at least for the developing countries, because they have a lot of potential for growth. But that's not happening. In fact, it is 1 percentage point lower than the previous decade. So low income countries could witness weaker growth at 5.5%, raising concerns about increasing poverty levels. Again, a big issue for us, because in poor and in LDCs, least developed countries and developing countries, poverty remains a major concern. And there are emerging market and developing economies. Here they have talked about commodity exporters. They have said that fiscal policies of the government actually, either they make the boom times very happy, or whenever there is a recession, or whenever the cycles are very slow, economic cycles are very slow, it is the fiscal policies of the government that drive commodity exporters into a slump or into a very bad situation. So fiscal policy recommendations have been given by this report. Talking about India, there are three projections basically that have been made. So first of all, India is going to maintain the fastest growth rate among the world's largest economies. So that is the place that we are going to stay in. Growth is estimated to rise steadily from 6.3% in the previous fiscal to 6.5%, as I told you in the previous slide. And a robust pace is expected of growth. So that is good news for India. And the reason for like good economic growth of India, that has also been mentioned. And thank your government, higher public investment, improved corporate balance sheets, because we have we have been tackling the issues of NPAs. We have been keeping a check on companies whether there are there should be no frauds, and health of corporate balance sheets appears to be good despite potential constraints on private consumption and government spending. Still it is almost good. And the fourth one is that there was another 7.3% has been the growth projection by MOSPI, Ministry of Statistics and Program Implementation. So World Bank's growth estimate for India is lesser than that. That's about it. You can just write these 3 points and you will be done for India. And these are not huge points or big points. You can just summarize them in less than 600 words whenever you want to. Now moving on to the recommendations part. Now, Sejal, the answer is not Bangladesh. If you talk about any country which is facing poor credit ratings, the countries could be Sri Lanka, which had a sovereign debt crisis. They could not repay the debt. They had taken loans from IMF and other organizations. They could not repay it. The economy went into a recession. The second country we can talk about is Pakistan. Now, talking about recommendations, what are the recommendations given by this report? And this is going to be the shortest part, because such reports, they give you observations, but recommendations, first of all, they do not have the power. These organizations do not have the power to implement anything, or to, let's say, can they guide Indian government, or can they guide government of USA, or can they command these governments? Nobody can do that. So just like we write our recommendations or way forward in conclusion in a very requestable format, in a very requesting manner, just like that, organizations like the World Bank Group, they also give their recommendations in a very respected and very diplomatic format. So you will see that, first of all, policy recommendations, what are these? That across emerging markets and developing economies, proper macroeconomic and structural policies and well-functioning institutions are critical to boost investment and long-term prospects. Now, what does this mean? They are indirectly saying that institutions in a particular country which are responsible for maintaining macroeconomic and structural policies, they have a great role to play. So they have emphasized their role, and boost of investment and long-term prospects depends on these organizations only. Then it has highlighted the potential benefits of investment. On one hand, it actually motivates investors to invest in developing countries and other countries. Secondly, it also urges governments to open their borders. I talked to you that we conducted a session on globalization few days back, and I told you that countries are actually closing their borders from open economy, or from era of globalization. We are moving on to an era of of policies, of implementing only those policies which benefits one particular country. For example, US does not want to help the rest of the world now. India does not want to remain open in all terms. We want to be open for trade only for those commodities which benefit us. So here, potential benefits of investment has been highlighted by World Bank Group, and this is here they're indirectly targeting on what? They're indirectly targeting on protectionism measures, or rise of protectionism in the world. So accelerating per capita income, per capita investment growth to at least 4% for 6 years can lead to rapid convergence, decline in poverty, and quadrupled productivity growth. So they're saying that poverty levels can go down, growth can increase if investment is allowed to happen in countries, and developed countries, obviously, if they are motivated enough to carry out investments. Then commodity exporting economies. They say that 2/3 of developing countries, they export commodities. That means raw materials. And what do governments do? Whenever commodity exporters are doing good, they actually launch such policies which help them do better. And whenever commodity exporters are not doing good, they're facing, like, let's say, some problem in the international markets, then fiscal policies actually increase their problems. So governments in these countries often adopt fiscal policies that intensify booms and busts. This drag can be reduced by putting in place a fiscal framework that helps discipline government spending, by adopting flexible exchange rate regimes, and by avoiding restrictions on the movement of international capital. Again, an attack against protectionism. And on average, these policy measures could help commodity exporters in developing countries, again they said that GDP growth can go up by 1% if you carry out these activities, if you employ fiscal discipline while carrying out public expenditure. And the most important thing that has been highlighted is for emergency times, just like we all have savings for emergency times, the countries are urged to build sovereign wealth funds and other rainy day funds that can be deployed quickly during an emergency. Because I told you, in developing countries, risks of emergencies are seen higher, risks of economic recessions are seen higher as compared to any developed countries. So the way to go is sovereign wealth funds. Now in the comment section after watching this video, just let me know, what are the sovereign wealth funds in India? Do they form part of government's money? Do they form part of consolidated fund of India, or this money is kept separate from the consolidated fund of India? And what is this money used for? And obviously this can be used in quickly in an emergency, but when it is not used for emergency, where is it used for? Any money that is kept in sovereign wealth fund, let me know in the chat section if you know it right now, or in the comment section whenever you watch this later. Then urgency of corrective action has been emphasized on, that global growth is expected to remain well below potential. So these are basically urgent times, and emphasizing the need for immediate measures, because this global economic growth will remain low for the next half decade. That means till 2030 we will not see a boom in global economic growth. So emphasizing the need for immediate measures for all the countries. So as you can see, no particular country has been targeted, but World Bank Group has given recommendations for almost all the problems that are around. It has given a problem for countries employing protectionist measures, countries employing fiscal policies which benefit them in the short run but destroy them in the long run, and suggesting countries that please have your emergency money, otherwise you'll end up into a sovereign debt crisis. So all these recommendations have been given. Now in the summary, what you can do is just conclude that in conclusion, this report gives us key takeaways or very good recommendations for the economy to fare, for world economy to fare well till 2030 or in times to come. Now there are two statements. First one is by Mr. Indermeet Gill, who is World Bank's Group Chief Economist and Senior Vice President. He said that without a major course correction, the 2020s will go down as a decade of wasted opportunity. Now that's a little negative statement. Unless you cannot remember his name and you cannot quote him, do not write this statement as yours, because this is a negative one and you do not want to give any negative statements from your side in the conclusion. The second one is from Ayan Kose, the World Bank's Deputy Chief Economist and Director of the Prospects Group. This report is related to the Prospects Group. So he talks about investment booms, that if investments in countries can be increased, when investment goes in, what happens? New types of businesses come in, new types of jobs come in, new types of products come in, and consumption also increases when more and more jobs are there. There is free flowing money in the country. So investment booms, they have the potential to transform developing economies and help them speed up the energy transition. Energy transition means, for example, India is also undergoing an energy transition. We are moving from petrol and diesel vehicles to electric vehicles. Slowly, we are moving from thermal power plants to solar power plants or hydel power plants. So that energy transition, it is costing us money. These vehicles are expensive, or our previous cars are being declared as unusable by the government year after year. So this is costing us money, and money for developing countries. And what can help us? It's the investment that can help us, investment from other countries, and achieve a wide variety of development objectives. And to spark such booms, developing economies need to implement comprehensive policy packages to improve fiscal and monetary frameworks, expand cross-border trade, very important, and financial flows, improve the investment climate. That means, exit policies and entry policies, they should be good. Taxes should be reduced, labor reforms should be carried out, and strengthen the quality of institutions which are actually looking after the corporate sector and looking after private investments. It should not be a hurdle for any foreign investor to get in your country to set up a business, and hurdles should be reduced as much as we can. Now, briefly highlight the key takeaways and recommendations of Global Economic Prospects Report 2024. This is what we have discussed. You can write your own answers, and I urge you to write your own answers for this question. This has been a little intensified discussion because we almost covered the entire report in like 30 minutes. Post your answers in the comment section in the next 48 hours. So today is Friday. Kindly post your answers by Sunday 5 p.m. Beyond that, if we see answers, they will be respected and welcomed, but they will, sorry to say, they'll not be evaluated. So kindly post them by Sunday 5 p.m. And now, whatever doubts you have with regards to this discussion and to any reviews that you have got in the past, I see some of the doubts there. Then kindly let me know in the chat section. Otherwise, if there are no doubts, then we'll call this a day. Where can I get the report? On the website of World Bank Group. You can get the full report. It's of 230 pages. And if you do not want to go through the whole report, the World Bank Group has provided with a summary also. I can take you there. Okay. So if you go to the World Bank's website, they have provided you with a summary of the report. It reads global economy set for weakest half-decade performance in 30 years. So little summary has been provided, and the full report can be downloaded from the same website. Okay. It can be downloaded when you type global economic prospects. So yes, you can go for it. If there are any doubts, then this PPT that we have discussed, all the discussions that we have carried out, this will be available on our Telegram channel by tomorrow morning. So you can refer to this content, copy this content, but copy only if you have learned. Try to, revise this content by watching the video again, going through the PPT, then write your answer, preferably without looking at the presentation or the PDF that you get. And kindly maintain an index of all the topics that you are covering in a computer, in a folder on your desktop, or in any soft copy that you want to maintain. I can understand, but kindly help us write so that we can learn from you to write. We can also enhance it more. Sejal, kindly make it clear what you want to convey, and have you tried to book a strategy call with us? How to make sure to mention all relevant points while staying within the word limit. Monica, first of all, if you want to write a lot, Monica, the first thing that you should employ is write in points and try to summarize these points. See, this presentation can be a little verbose because I'm also trying to explain you the topics. But, even if it is verbose, try to, for example, this point, this is for commodity exporting economies. This can be a little verbose, but you can summarize it in 1 to 2 lines maximum. And for other lines, there are just one points are mentioned. So they should not be a problem. In fact, even if you try to copy and paste this entire discussion, this will be less than 600 words. So summary and writing in points, that is the way to go. Sejal, have you written an email? So we'll contact you. I'll inform my team. I'll inform my support team, and we'll try to contact you for all the doubts that you have. Sribhash, okay. Okay. I got that. Kindly pin the answer. Everyone got the same marks and the analysis seemed similar for everyone. Okay, Sribhash, I'll get this addressed. ASAP. So our next session is going to be on Monday. So by that time, this review problem that some of you are incurring, that will be addressed. That's a promise, okay? So no problem. All right. You're welcome, Monica. So any doubts that are coming, guys, this has been a long discussion. If there are no doubts, then kindly subscribe to the channel. Kindly send us your feedback at hello@edutap.co.in or contact us at this phone number. Let me know in the comment section how are you finding these sessions, and do not forget to answer the questions that I told you to answer. What are the sovereign wealth funds that India is maintaining, or are we not maintaining any? And what are these sovereign? What is the money? What is the money from sovereign wealth funds used for? Okay, thank you all of you, and take care. I'll see you on Monday. Please post your answers by Sunday 5 p.m.